Are you a single member LLC owner? If so, you might be unknowingly putting your personal assets at risk. In this video, I'm going to reveal the most common mistakes single member LLCs make and how you can avoid these pitfalls to protect yourself. The information I'm about to share could be the difference between safeguarding your assets and losing them, and you'll understand why in a second. By the way, if it's your first time watching, my name is Navi Maraj, and while I'm definitely not an attorney, I am a CPA who joins in on meetings with my clients and their attorneys when setting up their entities. So what I'm about to discuss in this video is taking the confusing attorney talk and boiling it down into common speak so you can understand the pitfalls to avoid. Having said that, normally I help entrepreneurs just like you save thousands of dollars in taxes. I do this by creating content like you're watching right now, right here on social media, and through a comprehensive course you can find on my website at navimarajcpa.com. More on that later. Let's dive into today's topic. Okay, so today I want to highlight some common mistakes that single member LLCs often make and provide tips on how to avoid these pitfalls to better protect yourself and your personal liability. First, let's start with a quick overview. What exactly is an LLC? An LLC, or limited liability company, is a business structure where the owners, known as members, enjoy limited liability. A single member LLC is simply an LLC with just one owner. The primary reason people choose to form LLCs is for the protection it offers, that limited liability I said a moment ago. This means that any legal or financial obligations the business incurs are the responsibility of the LLC itself, not the personal responsibility of its member. When you set up an LLC, you essentially create a new legal entity that's separate from you, the owner. The idea is that if the business faces lawsuits, debts, or other liabilities, it's the LLC's assets on the line, not your personal assets like your home or bank account. But let me explain why this is crucial to understand. While this is the intended purpose of an LLC, it doesn't always work out perfectly. There are situations where a member can still be held personally liable for the LLC's obligations. This is known as piercing the corporate veil. Imagine that the LLC provides a protective layer, a veil, if you will, that shields your personal assets from business liabilities. But if you make certain mistakes, that veil can be pierced, leaving you personally exposed. Unfortunately, single-member LLCs are more susceptible to the risk compared to multi-member LLCs, simply because there's only one person in control and there aren't other members to offer checks and balances. Notice I did not say the primary reason people choose LLCs are for tax benefits. An LLC does not save you any money in taxes unless you make an election to have it taxed in a more efficient way, such as an S corporation. That is not the topic of this video, but if you want to understand that concept much better, then watch this video about LLC tax benefits. And yes, it's called LLC tax benefits because so many people get it wrong that I have to actually title the video incorrectly so you'll actually watch it. But as I said, an LLC has no specific tax benefits, and you'll learn why that is after watching that video. Okay, I digress. What I'm going to do now is list the factors that lead to piercing the LLC's corporate veil, and then after listing them out, I will provide you with ways to avoid these common mistakes. There are various factors that courts consider when deciding whether to pierce the corporate veil, and these can differ from state to state. However, they generally revolve around these 7 key issues, okay? Number 1, mixing personal and business assets or failing to keep separate financial records. If you're using LLC funds for personal expenses or mixing personal and business finances without proper documentation, it blurs the line between you and your LLC. This lack of separation can lead to the veil piercing. If you treat your LLC as an extension of yourself rather than a separate entity, you risk losing the protection that the LLC is supposed to be providing. By not maintaining distinct financial records for your LLC, you're throwing up a red flag that could lead to veil piercing. Number 2, inadequate capitalization. An LLC that starts off without sufficient funds to cover potential liabilities may be seen as a way to avoid personal responsibility, which increases the risk of personal liability. Number 3, ignoring formalities. While single-member LLCs aren't required to follow strict corporate formalities, neglecting basic practices like maintaining separate records can make your LLC look more like a personal facade than a legitimate business entity, okay? So avoid that. Number 4, engaging in fraud or misrepresentation or using the LLC for wrongdoing. Any fraudulent activity or misrepresentation of your LLC to creditors or others can be a strong reason for a court to hold you personally liable. Similarly, if your LLC is involved in illegal activities or is used to evade obligations, courts are more likely to hold you personally responsible. Number 5, no real business activity. An LLC that exists only on paper and doesn't engage in actual business can be seen as a shell company, increasing the likelihood of veil piercing. Number 6, not clearly representing the LLC in business transactions. If you don't clearly indicate that you're acting on behalf of your LLC in contracts or other agreements, you might be held personally liable if something goes wrong. And number 7, single member status. Now, this one might come as a shock to you, but while being the sole owner doesn't automatically lead to veil piercing, courts do scrutinize single member LLCs more closely, especially if there are other factors at play. Therefore, when your business is established as a single member LLC, it's even more important to follow the guidance I'm about to jump into. So, how can you avoid these risks? Let's look at some common mistakes single member LLCs make and how to prevent them. Number 1, maintaining separate assets and funds. One of the biggest mistakes single member LLCs make is not keeping personal and business finances separate. It's crucial to have a dedicated business bank account and credit card. Every dollar that comes into the LLC should stay in the LLC's account, separate from your personal funds. Using business money for personal expenses like rent or subscriptions is a big no-no and can lead to significant legal trouble. This is one of the most common reasons why the corporate veil gets pierced. As a CPA, I can tell you I see this all the time. If you actually want to receive the protection of the veil, do not pay for personal expenses out of your business accounts. Take a draw or a distribution, put the money in your personal account, and then pay for your personal expenses. Number 2, following corporate formalities. Another common error is not adhering to corporate formalities. Even though it might seem unnecessary for a single member LLC, you should still follow the formal practices of a multi-member LLC or even a corporation. This includes things like having an operating agreement, documenting major decisions, and keeping minutes of the meetings that you're having. Even if you're just the only one making those decisions, you got to record it. This is important because courts will look for these formalities to determine whether this LLC is a legitimate business or just a personal front. Number 3, avoiding undercapitalization. Undercapitalizing your LLC is another big mistake. While you might think it's safer to keep little to no money in the business to avoid losing it in a lawsuit, this can actually backfire. Courts expect your LLC to have enough capital to cover its liabilities. Failing to do so could lead to personal liability. Number 4, signing contracts correctly. When entering into contracts, it's vital to sign in the name of the LLC, not in your personal capacity. Always make it clear that the LLC is the entity entering the agreement. For example, you should sign as, your LLC name by your name, member, to avoid any personal liability. Number 5, getting insurance coverage. Don't neglect insurance. While an LLC offers liability protection, it's not a substitute for having adequate insurance. A general liability policy can cover a significant portion of potential damages and help keep your personal assets safe. Why? Because let's say you get sued for $250,000. And because you're listening to my video and you understand you need to keep the LLC capitalized, you have $50,000 of equipment and $50,000 in cash in your business account. Well, you're short $150,000, right? In the event you have an insurance policy covering you for the $150,000, the insurance company may pay out. If you don't have the insurance policy, the court may be able to pierce the corporate veil because you had one of the 7 issues I mentioned earlier, and they'll come after your personal assets for the remaining $150,000. So it's LLC and insurance that may keep you out of trouble. Now, as I mentioned earlier, I teach entrepreneurs just like you how to save thousands of dollars in taxes. Imagine joining Daniela, who saved over $30,000 in her first year, or Jeff, who is now saving over $25,000 annually. Valerie, another student of mine, saved over $10,000 in just the first year of implementing these strategies, and there are plenty of others who are doing the same. I've got folks saving $11,000, $6,000, or even $4,000 in their very first year of business alone. The reasons these results are possible is due to the way I teach the course, and I've got a unique 3-step process to unlock all of the tax savings that you deserve. First, you'll build a strong foundational understanding of business taxes and accounting fundamentals. So that way you'll know exactly how your business should be operating. Then you'll learn powerful tax strategies and nothing is held back. You'll discover how to save thousands of dollars with an S corporation, hire your minor children, or even contribute over $60,000 to your retirement account. Finally, you'll implement these strategies side by side and step by step with me using QuickBooks, ensuring that you save every dollar possible. And here's the best part. Most students complete the course in just a few weeks, so you could be on your way to massive tax savings in no time. And whether you're a brand new entrepreneur or running $1 million business, this course is designed for you. Lastly, I offer a 30-day money-back guarantee, no questions asked, so I take on all the risks. So if you're ready to start saving thousands of dollars, visit my website at navimarajcpa.com or click on the link in the description below to learn more and preview the course content. So if you learned something in this video, subscribe to my channel and click on the notification bell so you'll be alerted when the next one is released. Or if you can't wait and you want to learn more right now, click right here to watch another one of my valuable videos, and I'll see you either in that video or in the course.